Hello, everyone, and welcome to this week's chart review on last week's watch list. Wasn't a great week, and I'll be honest with you, I really didn't do hardly any trading this week. I had a lot going on at work. Um, couldn't really pay attention to stuff. There were a couple days, I think, where I didn't even look at the market all day. Today was one of those. Had today off. So I wasn't home all day. Never looked at charts today. Um, so anyway, let's go over the list here. Uh, Here is the watch list that I had. Excuse me, that I had for last week. Oops, that's incorrect there. Let me finish typing this. Okay. So that's what we had: AMC and BBBY, which I did say I would be very careful with these. I don't like trading these stocks that social media like to grab a hold of. There's really no telling what they're going to do. Charts aren't really, I don't want to say aren't a factor, but I just don't trust any of that stuff, because if they decide they want something to move, they're going to make it move regardless of what the chart looks like. So I wouldn't have traded those anyway. But if you did, AMC did trigger. Triggered inside week up. It did move about $4. The high was 64.96. The trigger was 60.62. So it moved a little bit over $4. So if you did get in it, you had a chance to make some money. But again, I just don't, it opened way down here. So it had $9 to move before it even triggered. And if you have a $9 move and only a week to do it, it's not going to, most likely not going to work unless social media gets a hold of it. By the time it gets up here, it's got to take a break. It's got to rest. You run out of time. It did trigger. Like I said, $4 move. You could have made money on it. It's not something I would have touched. Bed Bath and Beyond never triggered. You see here, the trigger was here. It had a long way to go to even trigger. It had an $8 move to go just to trigger it. I actually thought it was something better to the downside, because we kind of had, it was an inside candle, but it was gravestone doji, more of a technically not a gravestone doji, because it would have had to have been above this candle, but the move would have been a break below here with your target here. It wouldn't have quite hit the target, but I didn't play it to the downside anyway, because I thought if this did anything, it would be because of social media. So I didn't trade that one. Coca-Cola, inside week up. The high here was 56.34. So that was our trigger. It never triggered. It opened here and dropped the rest of the week. It actually came down pretty close to the bottom of the broadening formation. So we'll see what this wants to do next week. We may see a little bit more of a pullback down to here, touch the bottom of the broadening formation, and maybe we'll get a bounce back up. Maybe it'll continue to come down. We'll see what they want to do with it. So that was a no trigger. ROKU was a good one. The trigger was at 352.74. Target one was at 357.39. So you had a $20 move there from, I mean, it doesn't look like much here. Actually, that's a $5 move. It doesn't look like much of a move here, but a $5 move on ROKU is pretty darn good. If you have weekly options on that, you're probably looking at you're probably looking at 50-70% maybe. So it would depend on what day it was that it broke it. We can actually look and see. I got a beeping in my headset for some reason. I don't know what that's from. but hopefully it's not interfering with the video. So it actually broke it. What day was this? Let's see what day Monday was. Monday was the 14th. It actually broke it on Monday right here, and it broke and hit its target. But look at the broadening formation that I had drawn. This wasn't here when I drew the broadening formation. This was Monday, and if you go back and look at my video from last week, none of this was here. This whole right here, oops, I didn't want to do that. None of this was here. From here on, this was the last candle that was showing. But I drew the broadening formation. I think I drew it off the weekly chart, and I drew it from this candle to this candle for the broadening formation. And look what happened here. Monday, let me double check, is that Monday 14th? Yeah, Monday it came up, it popped just above the broadening formation, and it came back down, and it closed right at the broadening formation almost perfectly. You see we did it again on Friday, on today. Today it popped up right to the same spot, broadening formation, and stopped. But either way, here, it would have triggered here at this level, right here, inside week up, which was based off of this candle, the high of this candle, 352.74, which was the weekly high last week. So it triggered here. This was your first target. If you didn't get out here, you should have been pretty cautious right here and unloading some at least, just because it's the top of the broadening formation. Then we pulled back. At this point, you could have put your stop maybe just below here, knowing that if it comes back, if you want to be a little bit less conservative, you could put your stop halfway through this candle. If we pull down halfway through, there's a good chance we're going to come all the way back through. Then we had a 2-2 reversal here back to the upside on a daily. We triggered here and broke above it. So if you wanted to enter it again, you could have entered Thursday afternoon when it broke above this and then held it overnight, which would have been a huge win. You could have played it a second time, which would have been a huge win to hold that overnight. You would have opened a little bit lower and been down initially, but if you would have held through the rest of the day, or if you would have just played it today, let's look at the 60 minute. Let's go down to the 15. We broke above it right here at the open. So if you would have got in here at the open this morning, you had a $18 move up to here on expiration day. That, I'm guessing, probably 300, maybe 500% on the dailies. We could probably pull it up here. Let's see, ROKU, today's expiration. Let's go with the, let's see where, let's say we would have traded look for about a 357 target. Let's say 357, maybe 360. So let's say we had a 360 target. I'll bring that over here. I'll just plop it into my other grid, and I'll pull that over. So the entry would have been here. Let's get down a little bit smaller time frame to see what time that was when it triggered. So that triggered 9:30 right at the open. If we would come over here, actually we can even get down a little bit finer, a little bit of a finer view here. Okay, we're looking at the 1 minute chart here. We go back, here's the open. So you could have got in at 9:31, let's say, and here's today's expiration 360 calls. If you would have gone in at 9:31, I don't know what that dinging is. Just did it again. I hope you guys can't hear that because I know it's going to be annoying. If you would have got in here, you would have paid about $160 per contract, roughly $155, $160 per contract. It hit $7 per contract. So you could have easily made 300, 400% maybe. So, and that's only in, well, it actually went higher. It went to $11. So you could have made almost 1,000, probably about 1,000% from 160 to $1,100. That's close to 1,000% there, and that's in 2 hours, an hour and a half. From 9:30 to 11 o'clock, an hour and a half, you could have made almost 1,000%. Not saying you would have held it the whole time, and not saying I would have held it the whole time. I'm sure I wouldn't have, but the opportunity was there. So let's go back to the daily. So that's Roku. Roku was a home run. Actually, could have been a home run twice this week. Like I said, you could have got it. You could have caught it right here when it broke the trigger, hit target 1 to the top of the broadening formation, and you could have done it again today. So that could have been a twofer there. I think I did trade Roku the first time, but I don't think I held it. You know what? I don't think I did trade it. I made like 2 or 3 trades this week. I don't think Roku was one of them. Actually, I did. I did trade Roku yesterday. I know I made some money on it. I didn't make a lot. I had a meeting I had to jump into, so I think I only caught it for like $60. Just a real quick move in like 30 seconds, and I got out. I think that's the only time I traded it this week. If you look at yesterday, let's go to like a 15-minute. Yeah, I traded it somewhere in here pretty early, and I just caught a little bit of it. I traded it even before it hit the trigger up here. I traded it on a 15-minute chart, I think, a 15-minute it was an inside candle, maybe it was a 30-minute inside candle. I don't recall what it was. Yeah, I don't know. I don't know what it was. It wasn't a huge hit, but I did make some money on it. Starbucks. Let's go back and look at the daily again. This was an inside week again. Scroll back over. Inside week up. It broke it. This was Monday. It broke it, got about halfway to target 1, and then it pulled back and fell the rest of the week. So this was actually a failure. Yeah, inside week right here. This one's for the inside month. If you go to the monthly chart, I have this one set for an inside month. But you see we're getting close to the bottom of the broadening formation on it. So let's see what happens with Starbucks. But you go back to the weekly chart. Yeah, it broke. And you can see here, it's a little bit, really zoomed in. 112.83. The high was 113.20-ish. Yeah, we'll call that one a failure. Just make sure you have your stops in place. Tesla was the last one that was on the watch list. Tesla did the same thing. It broke at 623.09. The high was 628.35. So you could have made a few bucks. It moved $5. You could have made some money, but it didn't hit the target. And you know my rule: if it doesn't hit the target, it's a loss. It's a losing ticker on my watch list. So all in all, not a great week. It didn't trigger to the downside, so I had it set. I had it for both of them, both ways. AMC, BBBY, I'm not going to count these because, like I said, the only way I think these would have worked is if social media got them, and it doesn't appear they did. I wouldn't have traded them anyway. Coca-Cola, no trigger. Roku, it was actually a double winner. Starbucks, that was a loser. Tesla was a loser. So 1 winner, 2 losers. You could maybe say 2 winners because Roku did win twice, but we'll just go with 1. So not a great week on. There's that dinging again. Not a great week on my on my watch list, but they're not all going to be great. I mean, I had a couple weeks where I was pretty spot on. We'll see what they want to do next week. If they want to take things back up. A lot of things are near the bottom of the broadening formation. I didn't pay much attention, but it appeared to be tech kind of made a run back up towards the end of the week. I think Apple fell down today, dropped back, pulled back some. But take a look at some major indexes here. SPY. Yeah, we're kind of right in the middle of the broadening formation. We went 3 down, or it's 3 down. It's a 3, but it's down because it's closed at the bottom. It's a red candle. Higher volume. So we'll see what they want to do. It's looking more on the weak side. If we're going to break the weekly, we have quite a ways to go. We're 414. We got to break 425. So we got to make an $11 move just to get back to bullish on a weekly chart. So now that could change. Let's say this week we're inside, and let me see if I don't know how to draw. I don't know how to draw a square. I don't know if the rectangle will work. I'm probably gonna screw this up, but let me try it. There we go. Let's say we have an inside candle this week like this. Next week, we would only have to break the high of this inside candle. If it's this week, we need to break the high of this to be bullish. If we have something like this next week and we close here, the following week, we only have to break the high of this to be bullish. And then this will be our target. So if you guys are confused by that, read up on the strat. Steve Nissen is also a great source, but Rob Smith he created and perfected. Here's kind of the way I explain it. I studied some Steve Nissen for quite a while, a lot of his videos, but it was kind of a whole bunch of stuff thrown at you. What Rob Smith did was took all that information and created a system from it. And it's a lot easier to understand if you learn Rob's strat. He kind of took all that stuff that Steve Nissen talks about